I'm Olivia Bono-Voznenko for Modern Wall Street, and we are switching things up today. We have Stephen Guilfoyle on a Wednesday. We're at the lovely Pier 11, and we also have him in midday trade. So, Sarge, thanks for changing it up.
The pleasure's all mine, and I'm glad to be here. Thank you.
Thank you so much, Stephen. Well, the word of the day seems to be unchanged. PPI unchanged, industrial production unchanged, housing market stayed at 63. So what's the definition?
Well, 63 is actually a really strong number for the housing market index. That's the home builder optimism index. So that's strong. We'll take that. Industrial production unchanged. That's a real disappointment because some of the manufacturing data has been better of late. So for that to be unchanged, yes, it's the fourth month in 5 that the number hasn't printed in contraction. But let's face it, this is not what the Fed and what the economy was looking for. PPI, nobody trades off the PPI. The CPI tomorrow is a much bigger fish. We'll see where we get there with that. Hopefully we get inflation. Not that I'm rooting for inflation because, hey, I buy stuff, okay? But the Fed probably is looking for consumer level inflation of 2.3 to 2.4% there. That would probably satisfy them and set things in motion for December. They can overlook all the other stuff.
Okay, well, something that certainly did change is the dollar. We usually don't picture a big green monster as a currency, but you're saying that it could be our enemy.
The animal spirits have found the U.S. dollar. With the expectations that we have for higher interest rates, higher yields, for economic growth going forward, in this Donald Trump era, there's so much hope. Maybe it all doesn't come to fruition, but there's so much hope that we'll see things improve, at least in the next year or two, that I think the markets may have gotten ahead of themselves. And with the dollar threatening to go to levels unseen here, I've seen technical analysis that has the dollar trading well above 100, maybe as high as 105. I can't see that on the charts myself, but smart people are saying that. So you have to respect the possibility. A stronger dollar will certainly hurt earnings going forward. But then again, you also have to price in a possible 15% corporate tax rate that will certainly help earnings going forward. So this is a tough nut to crack. And you can see it with the sector rotation we're seeing. Everything seems to be moving in one direction, then the next day it'll take a step back. Certainly financials have been better, but they're not the last couple days. It's a tough market to trade, but as long as you're nimble, which is a phrase used on the floor of the New York Stock Exchange, as long as you remain nimble and don't become set or married to any one trade, you can get through this.
Well, we're seeing a strong dollar. We also are seeing strong crude ahead of the OPEC meeting at the end of November. And who knows, maybe they will make a deal. It is the year of surprises, right? So with that said, how should we gauge oil?
The Russians have a way of talking oil up when they need to, okay? And their GDP is so reliant upon it. Now there's rumors that the Saudis and the Russians are talking about cooperating prior to that OPEC meeting at the end of the month. We all know that OPEC is famous for not getting things done. Now this oil's trading up a little bit, WTI is moving it up, and if the Russians play ball with OPEC and OPEC does agree to some kind of freeze or cutback, not the one they agreed to in September because they've already surpassed that by miles. So they'll have to come to some kind of new agreement. But if they did lay the groundwork and something does come to fruition, then even with the sizable increases in supply that we've seen, you might see support levels come in here in the low to mid 40s.
Well, Stephen, I hope that we see you in the next couple weeks. But if we don't, what do we need to look up to?
Look up to...
Look out for.
Look out for. Okay, earnings season's almost done. All right, so with that out of the way, we got a couple of retailers to get through. Walmart's tomorrow. But really, the Fed is the next best thing, next major thing, other than some macroeconomic data points, some housing numbers, I guess. But December 14th is when we'll get word from the Fed, and I fully expect to see a quarter-point increase in the Fed funds rate. But I think the market's ahead of that. So you'll get a knee-jerk that day, but it'll only be a playable knee-jerk if you trade like a day trader.
All right. Well, Stephen, thank you so much for your time. I guess it's time to go and hope to see you soon.
See you soon. I intend to.